Timo Wunderlich, let's get right into it with the VIC readings. The former will look at the best of the best value investment recommendations by the best of the best value investors out there. These are we have FLEETCOR Technologies Inc. The ticker is FLT. Price at the point of filing is $221.68. This is not recommendation or advice. Please do your own diligence before investing into anything, and let's get right into it. Description: we are long FLT and believe this is a compelling entry point for longer term focused investors, with FLT trading at just 12.5x 2023 PE and a nearly 9% 2023 EFCF yield. The company has experienced significant multiple contraction over the last year and a half, as it has been grouped in with legacy merchant acquirers and other payment companies that are facing a much higher risk of technology disruption. FLT shares have started to recover year to date, up 70%, but still trade well below the historical average valuation and near the company's true valuation. The current valuation, True valuation. The current valuation is highly attractive for a business and management team with a long-term track record of HSD to LDD organic revenue growth and a 18% EPS CAGR over the last decade. FCF conversion has also exceeded 100% over the last 10 years, with annual FCF of over $1 billion and EBITDA margins are over 50%. FLT is a leader in B2B payments and is well positioned to benefit from the conversion of paper based payments to digital. The business model is highly recurring, exhibits client revenue retention of over 92%, and is highly profitable. FLT is led by a highly capable management team with an excellent track record of long term capital allocation, including 90 acquisitions of varying size. CEO Ron Clark has created a substantial amount of shareholder value during his tenure. We like that he has an owner/operator mindset with a 5% ownership stake in FLT. In addition, management returns capital to shareholders and has taken advantage of the share price weakness to repurchase $2.7 billion of FLT shares over the last 2 years, while keeping net debt to EBITDA at a reasonable level of 2.6x as of Q3 2022. FLT businesses include fuel, 40% of 2022 revenue, corporate payments, 23%, lodging, 15%, tolls, 11%, gift, 6%, and other, 7%. While each category is unique in its customer base and product offering, they also share a number of characteristics. Customers are primarily businesses, have recurring, predictable revenue models, have specialized networks which create barriers to entry, and have similar selling systems. We believe that the company has strong market positions across most of its key end markets, and importantly, FLT helps its customers to save money and become more efficient. For example, in the fuel business, FLT helps its customers save money by leveraging FLT's purchasing scale and utilizing a closed loop system that removes third party costs. Additionally, customers also benefit from additional data that can help them drive greater efficiency across their businesses. Across all of its businesses, FLT believes that the total addressable market is $125 trillion versus FLT's controlled spend of $250 billion. See below for a full description of all FLT businesses. Cross-selling has been a key focus area for the company beyond fuel initiative and has started to become accretive to growth. The core fuel card business has laid the foundation for expansion into adjacent B2B businesses by providing the distribution, client base, and sales force and cash flow to further penetrate the other sizable B2B payment markets. Management has indicated that the revenue per cross-selling customer could be 50% to 100% higher relative to a standalone customer. Cross-selling has been a tailwind for the corporate payments business, which is FLT's fastest growing business. 70% of organic revenue growth in 2021 and 90% in 2022 year to date. In corporate payments, FLT is the largest virtual card issuer globally and has over 1 million suppliers on its acceptance network. The market opportunity is large, with 50% of B2B payments still made in cash. Robust growth in corporate payments as well as lodging should help FLT reduce its exposure to the fuel business, which has inherent volatility related to its exposure to fuel prices. Reducing the fuel mix of the business should lead to a higher valuation for the company. Company overview. FLT operates through six revenue segments: fuel, 40% of 2022 revenue; corporate payments, 23%; lodging, 15%; tolls, 11%; gift, 6%; and other, 7%. By geography, 68% of revenue is from the US, 13% from Brazil, 11% from the UK, and 13% from other international countries. The company has been highly acquisitive, with 90 acquisitions since its founding in 2000. Fuel. FLT provides fuel solutions to businesses and government entities who operate vehicle fleets. The business mix is 60% domestic and 40% international. The company has agreements with over 55,000 gas stations, which accept a FLEETCOR's proprietary cards. FLT solutions help businesses monitor and control fuel spend while also providing important analytics to customers. Fuel revenue is derived from program related fees, which include transaction fees, network fees, card fees, and interchange. The fuel business revenue drivers are fuel spread prices, 10 to 12%, interchange, 30 to 35%, fees, 40%, and accounting, servicing, or program fees, 15%. FLT delivers savings for its customers by using its scale to negotiate lower prices for fuel purchases than the retail price. The company then benefits from the difference. Less commissions paid to merchants and discounts passed on to customers when it is operating a spread basis. Merchants partners with FLT because it drives higher volume to locations while customers receive a discount to retail fuel prices. When customers use FLT's proprietary card networks, Fuelman, Comdata, Allstar, CTF, etc., FLT can directly bypass Visa and MasterCard's networks. Generally, higher fuel prices are beneficial to FLT's fuel revenue. Corporate payments. Corporate payment solutions are designed to help businesses streamline back office operations and associated with multiple areas of a company's spending, including payroll, accounts payable, and cross border payments. FLT's products help companies save time, reduce overhead expenses, and manage B2B payment processing more efficiently. The company's suite of corporate payment solutions include accounts payable (AP), automation, virtual cards, cross-border, and purchasing and T&E cards. The company generates more than half of its revenue from interchange, while the remainder is related to fees and the FX spread on cross-border payments. The Comdata virtual card or check replacement solution runs solely on Mastercard's network, and payment flows are integrated with FLEETCOR customers' internal systems. The virtual card is denoted for a specific amount and can be used only one time, and when the payment is made, full remittance data companies each payment, which makes the product superior to ACH for reconciliation purposes. The value proposition for corporate buyers is the significantly lower cost relative to checks, saving of up to $5 per check. While suppliers also benefit from easier reconciliation relative to ACH payments, FLT also offers accounts payable automation tools, which helps companies outsource their AP process, reduce strain on accounting departments, and improve the customer's data. Several of the FLT's partners, including Bill.com and Avid Exchange, are growing rapidly, which is helping to drive corporate payments growth. Tolls. The company's tolls related operations are Brazil based via FLEETCOR's acquisition of SEMPERAR. FLEETCOR is the leading electronic toll payment provider in the country, as SEMPERAR processes for over 6 million tag holders in Brazil. Tags can be also used at over 4,100 merchant locations to purchase other services such as parking, fuel, car washes, and meals. FLT provides convenience and faster travel for customers while also reducing manual labor and cash handling at toll booths. Revenue is derived from fixed fees for access to its network and other ancillary services, as well as interchange on certain services. Lodging. FLT offers lodging solutions to businesses that have employees who corporate travels to ensure policyholders displaced from their homes. The value proposition is the FLT provides access to deeply discounted hotel networks, and FLT leverages its scale to negotiate lower nightly rates. In addition, FLT uses proprietary data management and payment processing systems to manage customer billings and reports. Revenue is based on the number of transactions, hotel room nights purchased by a customer, and the company earns revenue from the difference between the amount charged to the customer and the amount paid to the hotel for a given transaction. FLT has large lodging partners such as Marriott, Wyndham, and Hilton in its network. Over 15,000 hotels in the network. Lodging is also a high growth area that is benefiting from a recovery in corporate travel from depressed levels, such during the pandemic. FLT delivered 28% lodging organic growth in Q3 2022. Gift. FLT provides fully integrated gift card program management and processing services to retailers in 60 countries in both plastic and digital form. Revenue is earnings based on the processing of gift card transactions sold by customers to end users, as well as from the sale of the plastic card. Other. Additionally, FLT generates revenue from other services, including fleet maintenance, is centered in the UK, and to a lesser extent, Europe and Australia. Employee benefit payments in Mexico and Brazil, and payroll cards. Additionally, FLT has its own proprietary debit network with 49,000 food locations and 12,000 fueling sites. Financials and valuation. FLT trades at an attractive relative valuation to the legacy merchant acquirers, and we believe its business model faces less risk of technology disruption. The company also returns a strong FCF to shareholders through sizable repurchases while also engaging in M&A. On its third quarter 2022 conference call, FLT provided an initial for a 10% 2023 organic revenue growth, average fuel price of $4.37, 200 basis points to 300 basis points of margin expansion, and EPS of at least $17. Over the long term, FLT should be able to deliver organic revenue growth in the HSD to LDD range and EPS growth of 15 to 20%. Risks. Revenue is impacted by retail fuel prices and fuel price spreads. In 2021, 12% of revenue was impacted by the absolute price of fuel, and 5% of revenue was related to transactions in which FLT's revenue is tied to fuel price spreads. The discount revenue portion will benefit when fuel prices increase and will be negatively affected when fuel prices go down. The spread portion, in which FLT earns a spread on the difference between wholesale and retail fuel prices, typically moves in the opposite direction of fuel, providing a partial hedge. FLT does not hedge fuel prices, and these factors can lead to some volatility in its results. FLT has some modest credit risk with its customers. The company payments products are: number one, prepaid cards in which purchases are debited against the preloaded balance, or number two, as a charge card where FLT will bill its customers at the end of period for the incurred charges. FLT does carry some credit risk, but the company's risk mitigation procedures, customer screening and credit limits and vetting procedures help to limit the risk. In 2021, bad debt expense was just 3 basis points of total gross billings. FTC lawsuit could lead to penalties or changes in business practices. FLT's fuel advertising and marketing practices have been subject to an ongoing FTC investigation since 2017 and a lawsuit since 2019 related to charging late and finance fees to customers in its North American direct fuel business. The company has made changes to its practices and does not believe that this matter will be disruptive to the business or material to its financials. FLT notes that we collected affirmative consent from 96% of its fuel card client base to the specific terms of their card program. The targeted fees likely account for 5% of total revenue, with even a worst case scenario in which these fees are eliminated, which is unlikely. The impact on FLT would likely be manageable. EVs could be a headwind for FLT, but the company has taken action to position itself to participate in this nation market. Customers with EVs will likely also maintain mixed fleets and will need FLT's solutions to help manage the complexity of the fleet. In addition, FLT should be able to participate in EVs through payments at charging stations on the road, and companies will still likely need the spend control features FLT offers its customers, and possibly discounts depending on how the market develops. FLT has added public acceptance networks for EV, public charge point or recharge points, both in the US and in Europe. The company also acquired Plug Surfing, an EV charging network and software solutions provider in Europe. In addition, the company has invested in EV software companies that facilitate at home recharging and reimbursement. Overall, FLT participation in the EV ecosystem should help to mitigate any pressure on fuel volumes over the longer term. Catalyst: cross selling success, return of capital to shareholders, resolution of FTC issue. Thank you very much for tuning in. See you next time. Please write down in the comments below if you will invest or why not into FLT.